All right. Well, hi, Ihor. Today we have Ihor Dusanewski, who's the managing director at S3 Partners. And S3 Partners is a data analytics company. They do all sorts of, we'll get into what exactly kind of the data they look into. But most recently, if you've been following this GameStop AMC craze, the short squeeze craze, you've probably ran into some tweets by Ihor and citations from S3 Analytics on articles all across the web, on Bloomberg, Reuters, things like that, about the recent short interest rates with GameStop, BlackBerry, AMC, things like that. So I reached out to Ihor just to build some clarity around what the true short interest rates are in these highly shorted stocks. That way we can better understand what exactly is going on. So hi, Ihor, and welcome to the show.
Hey, thanks for having me.
So could you do this like a brief introduction about yourself and kind of what S3 Partners does, just a little bit more in depth?
Sure. I'm head of predictive analytics here at S3. My background is from back in the olden days. I was in controllers at Morgan Stanley, and I've been in stock loan for over 30 years. So I use that kind of background to help us produce data and analytics for our clients and our platform. S3, we're a technology and data platform. We make data easy consume for our clients, and we provide analytics for them and that they use on their desktops.
Perfect. So you provide data for like Bloomberg machines and things like that as well?
Sure. Bloomberg, Refinitiv, we on the cloud platforms, we try to get and we also have a retail app. So this is not just for institutions. I think that's really important, is that our kind of growth has been started with institutional buy side and sell side activity, but recently we've really opened up and gotten some more business and activity on the retail side. So this information was really only available for big institutional clients. Then it got a little more decimated, given out to some of the smaller institutions, and now we're trying to get it out to every single person who has a web access.
Right, and I think the dissemination of information is kind of what has helped cause this short squeeze craze that we've been seeing. Now that everyone can have access to this information, there's some people grouping together who are like, hey, maybe we can do something with this and try to partner together as a bunch of individuals. So that's definitely interesting. So sorry, go ahead.
Yeah, no, I mean, social media has really made a difference in the investing world. I mean, you've got ideas traveling at the speed of sound, and you've got people kind of agreeing with each other and acting in unison. We're seeing much more investing by people that never really invested before.
Do you have a lot of people reaching out to you now just with this recent craze to try to pick up some more data and things like that?
Constantly. It's been tough to keep up with. So I do try to update some status of certain stocks on Twitter and other social platforms, but it's been kind of overwhelming 2 weeks.
Yeah, well, your tweets have definitely blown up because I've seen them cited on articles. I've seen people doing commentary on, using them as citations. So it's definitely valuable information for sure.
Yeah, this is all new for me. I mean, I've been tweeting out information all along. Tesla was a big thing, where I provide short interest information on Tesla, and but nothing like this past 2 weeks.
Right. And what is your Twitter handle, just in case anyone wants to?
At Ihor S3.
Okay, I'll put that in the description as well.
Right.
So just jumping into this, just to cover the basics, could you just define short interest, float, and borrowing fee? Because that's included in most of your tweets.
Right. Short interest is, well, let's start with float. Float is the amount of shares that are readily tradable for a stock. So you've got what we call shares outstanding, which is the amount of shares that a company has. A lot of it's being held by insiders or is locked up. And so that's not tradable. If you're an insider, you can't trade your stock. So basically, float is what people are holding that can actually buy and sell on the street at that day. Short interest is what short sellers have put on as a short side bet. So they are shorting stock. Shorting stock means that I'm thinking that the stock price is going to go down, so I will sell stock today and buy it back when the price drops and make the difference in price between when I shorted it and when I bought it back. This is a practice that's kind of understood on the institutional side, a little bit less understood on the retail side. And it's not something that every retail investor should really jump into head first, because as opposed to buying a stock where you can only lose what you invested, if you sell a stock, as was seen in GameStop early on, your losses are, theoretically infinite. So I can put in $40 and short a stock, but I might lose 200 of it.
Right.
Yeah, so that's a big difference between both sides.
And could you define borrowing fee as well?
Sure. So in order for someone to short a stock, you have, well, number one, you have to get what we call a stock locate. So you go to your broker and you say, hey, can I borrow? Because basically you're selling something you don't own. So you have to borrow the certificate, basically the stock, in order to eventually settle your trade. So you go to a lender, or your broker goes to a lender and says, I want to borrow GameStop. And the lender will say, yes, I have something to give you. So now that you go, the broker will come back to you and say, yeah, you're allowed to short. So you short the stock, and eventually you get charged when the stock settles. You get charged a fee for borrowing the shares. So for some 93% of all stocks that are in the U.S. trade in the U.S., the borrowing fee is 0.30%, which is called general collateral, the cheapest borrow cost for the easiest to borrow stocks. Something like Amazon, IBM, those are all GC stocks. GameStop at one point was trading at 30% fee, with rates going upwards of 200, 300%, which means that there's no supply. Stockholm is really a supply-demand driven market. So if supply starts dwindling, rates start going up, because lenders say, there's a lot of demand in the name. There's not much left for me to give out. I can charge more because people are willing to pay more. So GameStop is, I think, last time I calculated, the shorts in GameStop paid over $100 million in stock borrow fees so far this year. So it could be an expensive proposition.
Wow. So is it a direct correlation? The higher the short interest, the higher the borrow fee?
Yeah, to a point. Something like Apple has a tremendous amount of short interest, but the borrow fee is GC. It all depends how much supply, loanable supply, is available. Andrew, can you stop here? I want to close the door. My dog is barking.
Yeah.
Yeah. So stock borrow fees can get very expensive for certain names. And the big problem with that is that it takes a bite out of your profits. So you can have a profitable trade and make, $10,000 on a trade, but if your borrow costs are $15,000, you actually have a loser. So, right. So a investor really has to take a look and have to ask their broker, what rates are for a short sale. And it's important also to know that these rates change every day. So you can be charged, when you started the trade, it could be, 0.5% cost, but as more shorts get in and supply gets dwindling, all of a sudden your rate gets more expensive, and at some point it could get 2, 3, 5, 20%, which means now the trade's not so profitable. So right. You really have to manage.
That makes a lot of sense. So right now, I guess not as expensive as it was, but it's still extremely expensive to short GameStop or AMC.
Yeah, the rates are down to like 8% now. So still very expensive, still, really, not a cheap borrow, and you have to manage it, but it's a lot less than the 30% that it was a couple of weeks ago.
Right. Okay, so getting into the short interest again, something that I've seen a lot of question about and even conspiracy on is the New York Stock Exchange. They require the short interest to be reported about twice a month, and the last one was January 27th, and the next one was February 9th. But we're seeing all sorts of articles with ranges of short interest for AMC and GameStop. I mean, like AMC, we're seeing anywhere from like 13% to 80%. GameStop, we're seeing anywhere from 30% to over 200%. And according to your tweets, a lot of them are on the lower ends of those spectrums. So I'm just wondering, is any short interest that's reported after those twice monthly reporting dates, is that estimations based on volume and things like that, or how do we get those calculations?
That's a great question, because one of the main things we do here at S3 is we calculate short interest on a daily basis. So we use publicly disclosed and kind of private data that we get from brokers, exchanges, our clients. We have over around $3 billion of assets on our SaaS platform, so we can see a lot of data. So what everyone else is seeing is little streams of data coming in. We've got pipes everywhere, and we aggregate all this data, and we create this basically data lake that we can look at, and our algorithm takes these inputs and using the regulatory reported data and the changes that we see in the market as we, on a day-to-day basis, we make a calculation for short interest every day. And it is true, a short interest calculation. It's not stock borrows. It really is something that, the buy side and the sell side uses, a lot in order to see what the activity on the short side is every day.
So is it an estimation, or is there a margin of error, or is that dead set?
Right. It's not like we're counting every short sale, because that right. information just doesn't exist. So right. Yeah, like the DTC does give a number for short sales, but unfortunately it doesn't give the other side of the ticket, which is buy to covers. So it does you no good if you know how many short sales there were, if you don't know how many who were closed. So by only seeing half the picture, you really can't come up with a true number. We use this information as part of our, some of the data that we use. So where our number is, I think it's 80% of the time we're within 5 to 10% of the actual number.
Okay. So what would you say about these estimations that on seemingly credible sites that show GameStop like 226% short interest? Like, how does someone even get that number?
Right. A lot of it is just a stale number. So they're using the last reported number, and that was 144%.
Yep, I've seen that one too.
Right. So that's basically just, it's what they have at their fingertips. So they use a 2-week-old stale number. Other people are using stock borrow as a proxy for short interest, but not every stock borrow is equal to a short sale. So that kind of relationship is extremely flawed. In stock loan, you can have one broker lending to one broker, lending to another broker, lending another broker, to the final broker that has a short sale in their books. So in effect, you've got 4 borrows, 1 short sale. Mm-hmm. So a lot of times that activity in the stock loan world kind of muddles the number and kind of inflates it. On the other hand, you've also got something called internalization. So if a broker has an account that's got in margin, he can use those shares as collateral and actually lend them out. And right. This is how you get these large amounts of stock borrows available. So that is not a stock borrow. So every time a broker uses his own internal supply to cover a short sale, that doesn't hit the stock borrow market. So the stock borrow market either inflates the number by using multiple broker transactions, or misses a ton of broker transactions because they don't have access to the internalization.
Okay.
Our algo takes that into consideration.
Okay, that makes sense. What is the most recent AMC, GameStop, and BlackBerry short interest that you guys are reporting?
Right, GameStop is at $1.4 million worth of short interest, which is like 25.4 million shares. The short interest float is just under 50%, 49.8%, I think. What we do also is we calculate our S3 short interest percentage of float, which is different from the traditional calculation, because every time there's a short sale, you've got a synthetic long created. And that is basically a tradable share that's not included in the traditional float calculation. So, and this happens because when a lender, long shareholder, lends his stock to the short seller to deliver on their short trade, there's a buyer on the other side of the short, of the sale. Right. So you've got the original guy who lent the stock, the short seller who sold the stock, and the buyer who bought the stock from the short seller. So at the end of the day, you've got 2 longs and 1 short. Mm-hmm. The only difference is that the lender no longer gets dividends from the company and no longer can vote his shares, but he still gets the price movement and the P&L on the price movement of the stock. So our S3 short interest percentage of float for GameStop is like 33%. It's much less. And one of the reasons we came up with this metric is the idea that short interest percentage of float can be over 100%.
Right.
That's impossible. You can't get 5 quarts of milk out of a gallon jug. It's right. It's just, you can't short more shares than there are. These synthetic longs is what allows more short selling, and using the old calculation, it seems like it's over 100%, but when you put the synthetic longs into that denominator,
Mhm.
you realize that the number is always going to be below 100%.
Right. It makes more sense to filter out the synthetic longs, but I guess it to someone not familiar with the process, you're just confused because you just see short interest versus short interest,
Right.
where yours might be 40%. Comparing that to the normal calculation, that might make it 55, 60%
Right.
synthetic longs.
So our number kind of gives investors and a better idea of, number one, what the true action on the short side is, and two, when you look at that, and also with like stock borrow costs, it tells you how much shorting is available. So if I see a really high S3 short interest ledger float and really high stock borrow rates, I know there's virtually no stock borrow left, which means there's no short selling that's going to happen in size. And that's why when GameStop started going up, I said it was a long buying rally, because we didn't see share shorted decreasing, and rates were kind of staying flat, and our number was staying flat. So it's like, you know what? This is the longs pushing the stock price up. This isn't the short squeeze with the short sellers buying to cover.
Okay, that answers a lot of questions. So, what was the highest S3 short interest you saw in GameStop and AMC?
It was in the 60s.
Okay.
Yeah.
So from
Low
that
60s.
point, what did you say was the most recent GameStop?
33.
Okay, so about half as much. And when was it in the 60s?
Just at the peak of the GameStop stock price. So it was last Tuesday,
week.
Wednesday.
Okay.
Yeah.
And how about AMC? What was the peak there?
I just don't have that on my fingertips. Sorry. Yeah.
Problem. So, what do you think this means in terms for people who are still banking on there to be like some kind of short squeeze? Do you think it's much less likely now that these short interest rates are cut in half?
Well, I mean, most of the short squeeze already happened. So we're down from some short interest of 50 some odd million shares down to, I think last call was 25 million shares. So we saw probably around 32 to 35 million shares covered over the past week. So you've had an appreciable short squeeze in the name already. And a lot of this was when, right after that run up, when stock prices were really volatile, we saw a lot of shorts getting out of the market. There is still some to go. So I think that if GME starts going up in price again, you're going to see these shorts, re-incurring their mark-to-market losses that they did when it ran up to over $300 a share, and they're going to get squeezed out of the market just like they were before. And we're on this kind of seesaw here, where you've got retail and institutional long buyers that are holding on and buying, keeping the price up, and you got short sellers that are waiting for the price to go down. I think that the tipping point is going to be if we have a bunch of long buyers looking to cash out their trades and put money in their pocket and get out of the position.
And that'll just tank it for everyone. Basically.
Yeah. It's kind of like you see a little crack in the dam where you've got a guy who looks at his broker statement and says, "Wow, I'm up 50 grand," but there's nothing in his pocket, and he's got bills to pay, and would like to do something with that money, and he says, "Let me cash out some of that." So once you start seeing that, there's going to be some sell pressure in the name, and other people might say, "Well, it's down $2. Let me close out some of my position as well." So if this continues, you get this little tsunami of selling on the long side, which can drive the price down really quickly, because there might not be buyers on the other side of the ticket. So if I'm putting out offers to sell my stock, but no one's buying it because no one wants to catch a falling knife, the stock price really dips down in like these quick and sudden moves, which we've seen in GameStop over the last week or so, where
Right.
it's not down 50 cents, down 75 cents. It's down 1, down 5, down 10, down 20, and that's because there aren't any buyers to offset the sales that we're seeing hitting the market.
Yeah, and I think one of the fundamental issues with this short squeeze is it's all individuals, and you see that price going up. Theoretically, that price can go infinitely high, but there's people hopping off, along the way up, and to coordinate. I don't even know how many people bought into GameStop. 5 million different people to kind of all get on, and you have all these forums of people saying, we're going to buy and hold until it hits 1,000,
Right.
5,000, whatever. But along the way up, like you said, people see their account plus 50,000 and they're like, all right, that's good enough for me. They hop off, but then, like you said, it teeters. And I just don't know if this many people can be can be coordinated to that effort.
Well, you've seen this in Tesla, so you've got the investors in Tesla basically buy and hold. There was, virtually no selling in that name, but you had people that loved the company, loved the car, loved Elon Musk. So there was a real emotional attachment to those shares. I'm not quite sure there's that kind of emotional attachment to GameStop.
Right.
So I think that while it was harder to crack the long buyers in Tesla, well, not harder, it was impossible because that hasn't happened. GameStop might be a little bit of a different story, especially when people see the profits that they had earned start evaporating.
Right, right. And actually, most of the people that I've been in contact with are more into AMC than GameStop. Even though GameStop, you see all the articles, it seems like more people are sitting in AMC, which to me is probably the harder squeeze because they have way more shares and the short interest is lower. But also, it might be a more valuable company, just fundamental wise. I haven't taken a look yet, but
No, you're right. You're right, and that's kind of an interesting point to have is that you have something like Tesla that has a very viable product that has future growth potential, and has serious revenue stream that's been increasing. AMC, same thing. They've got this viable product that after this COVID epidemic kind of calms down a little bit, you'll see more people returning to the movies, and their revenue stream is definitely going to increase in the near future. Whereas GameStop is that, what is their business model? Is there, how viable is it? And can they pivot and kind of redirect some of their activities to create a stronger revenue stream in the future? AMC is probably, the better long-term trade. And we have seen covering, it's one of the stocks that we've seen the shorts kind of losing steam and covering in the name. So this is a short squeeze in the making in AMC.
So you think with AMC it hasn't even happened yet, like we saw with GameStop?
Not to the extent that GameStop. Over the past week, we have seen short covering. There's still the major portion of the outstanding shorts are still in the trade, but we're seeing cracks and shorts covering, but not to the extent that we saw in GME.
Right. So what do you think of the? I'm sure you've heard of all about it, but the conspiracies, if you will, about the short ladder attacks on these stock prices. Do you think that's actually something that's a viable concern, or is it just kind of an excuse that your stock is going down and it's easy to point the blame?
Right. Well, I'm always a little bit suspect on the conspiracy theories or on both the long and short side because I have a hard time thinking that many people get in, kind of in concert to really act well and pull off something like that. Especially if you're talking about institutional side on the shorts, hedge funds don't talk to each other and expose positions and kind of work in tandem too much because the competition is just so stiff, and there's it's not a place where everyone kind of plays well together. So while you might see something that looks like these ladder attacks or naked short selling or whatever kind of is the topic du jour, most of the time it's just like if you look hard enough you can see a pattern anywhere.
Right. Yeah, I've kind of wondered that, and the problem is I don't know if there's any way to prove that it's actually happening, besides just saying, oh, look at it dropped multiple times in this time frame. It's like the stock has gone up and down 40% in any given day.
Yeah, and a lot of that kind of jumps in stock price is really the ladder of bid offers, not the ladders of short sales. You've got people looking to sell the stock, and the buyers are not there at every price point. So what you have is an aggregation of maybe some buy demand on I'm just throwing out prices at 220. Once that gets eaten up, the next set of large buys are sitting there at 180. So this price just kind of jumps from 220 and it's like bang bang bang, all of a sudden 180, and you turn around and you go, how did that happen? there must be something going on, but it's really, you've got a bunch of investors that are saying, wow, this stock looks attractive at 180. It's trading at 220. If it ever hits 180, I'll buy it. So these guys place these orders, and the stock price kind of moves to fill those orders.
Right. That makes sense to me. Yeah, and for a short ladder attack to happen, so you would need multiple hedge funds in on it, and you would also need a clearinghouse in on it, correct?
Well, you need someone willing to lend stock to them. So, prior to the last couple of days, there was just no stock left to borrow.
Right.
So, it's kind of hard to, create this whole offense when you don't have any bullets. So you can place all your soldiers, but, if they don't have any ammo, it's a pretty crappy, plan.
Right. Okay. Yeah, this was really illuminating. So, do you think that just, obviously just your opinion, do you think there's going to be any changes in the market just as all this settles? Do you think the SEC is going to, try to make any fundamental changes because of this chaos that we've seen?
Well, trying to predict what the government's going to do is a fool's game. We really, you have so many personalities and so many different agendas and ideas of what really happened, what didn't happen. So that's kind of tough. I mean, but just intrinsically in what's happening in the market, people have to understand that this can't happen to every stock. Right. It really has to be a kind of, perfect situation where you've got tons of short sellers, supply isn't, there's no stock borrow supply, so they can't reload their guns and continue battling the longs, as stock prices moves up and down. You need a concerted kind of, I'm not saying there's some sort of collusion on the long side. It's just, a lot of people thinking the same way and buying stock. So, there's a lot of things that have to go right in order for something like GameStop to happen again. Like, I can't see this happening to like an Amazon or an Apple or any big mega cap. There's just too much volume, too much stock borrow supply. It's a group of retailers buying up Amazon is not going to move it up 20, 40, 50 bucks. There's just too much volume. So you got to look at, smaller cap names. I mean, it's a tough, like AMC, like, BlackBerry, like Nokia, those are the kind of names where this can happen, not market wide.
So what effects does the short sale restriction list have on like a potential short squeeze? Because I believe we're on it today, both for GameStop and AMC. Right.
It's really, if you can get a locate, you can short stock. I mean, the regulation is there to protect, people not shorting without stock, people, depending on, have upticks. So I'm not sure it's going to make that big a difference in these names.
Okay. Yeah, we saw that. That was kind of the hot item of discussion yesterday was, we'll be on the short sale restriction list, so we'll have a positive Friday. And it always seems like there's much more to it than the surface level.
Yeah. There's, rules work well, but it's, there are always, you can trade not around those rules, but just within the rules, you can still trade. So you're not doing anything nefarious. You're just saying, okay, here are the rules, and this is what my action is going to be. You can still do business within the set of rules that are applied at the moment.
Right. And something I was wondering about the short sale interest, when I had seen your tweets and saw that it had gone down significantly, my first thought was, when the price was really high, you're saying that a lot of these shorts covered at these high rates for losses. I don't even imagine how much in losses, but when it's at the high rates, my first thought was, wouldn't this introduce a whole new group of people who are shorting, who are like, this thing's at 340 and it's not sustainable, or, whatever price. And my first thought was that would balance out the short interest. Did we not exactly see that happen?
You're exactly right. And that's why people were saying that this was a short squeeze when I said it wasn't. What you had was two sets of short sellers. So you had the fundamental short sellers to start. Those are the guys that were in the trade already from when the stock price was much lower. And they were looking at the company on a fundamental basis, saying that the future earnings and the divs and everything else are saying, I got a stock target of, I'm just throwing out a number, $10. and the stock was trading higher. So they came in saying, it's got to go back down to what I think is the target level. They rode the stock price up thinking this is going to turn around, this is going to turn around, this is going to turn around. And eventually it got to a point where they had to say, I'm out. And they started covering. The problem was there was a ton of momentum shorts standing on the sidelines who couldn't get in because there were no stock borrows available. So they were hanging out and saying, God, I wish I could short this at 300, but I can't because the broker won't let me because there's no stock borrows. I can't get a locate. When the fundamental shorts started covering and their stock borrows became released to the back into the lending pool, the momentum shorts came in and said, well, I'll take that and I'll short it at 300. So although you didn't see a net change in overall share shorted, what you saw was a changing of the guard. Basically, the first wave came in, got decimated. Second wave came in and said, I'll take your spot and let's see how this battle goes from here. So that went on for a couple of days until finally, we saw the price of GameStop start going down. So a lot of these momentum shorts were in it for the pure short term. They had no, they didn't care what the stock was. All they saw was technically it was overpriced, overbought over a short period of time. And most of the time when you see that happening in the market, you've got either a plateau or a retracement just on technical levels. So they came in and said, well, you know what? I'm looking for this to go from $300 down to $250, down to 200, and I'm out. So that's exactly what they did. They made $50, $100 a share, and they closed out their position. Luckily for them, there was someone behind them. Another momentum guy says, "Wow, $200! I think I'll take that bet, and I'll short it at 200, and hopefully it goes out to 100." And this kind of happened. So in the meantime, these shorts that were value guys just were bloodied, and they're seeing exit points saying, "Wow, I was down, $400 million, and now I'm only down 70. I'm out. I know I lost money, but I made most of it back, and I'm just packing up and getting out of this trade and lick my wounds later on." So this is exactly what happened in the market. And I was talking to several brokers, and that's exactly what they were saying was that shorts are covering, shorts are shorting, shorts are covering, shorts are shorting. So it's a crazy thing where they were busy on both ends of the trade.
Okay, so just in summary, correct me if I get anything wrong here. We have the price, the price action up to let's say $350. We have the group of hedge funds or shorters who it's floating around $350. They're like, okay, this thing might go to 600. We'll be absolutely bankrupt if it goes to 600. Let's cover our shorts, and this opens up more shorts for other shorters. We're like $350. This thing's going to go down to 100 tomorrow or whatever. Exactly. They short it. Those people make a ton of money. And then we have the few people, I assume, who started shorting it, I don't know, when it was at $6 or something like that, who hung on from the ride from $6 to $350 down to 200 or 100. And then they're like, okay, well, this might go back up to 400 again. Let's cut our losses.
Right. Okay. Right. At one point, shorts were down around $30 billion in mark-to-market losses. It was tremendous numbers. Now shorts are down only $8 billion with a B. So these guys made back a ton of their losses. A lot of them, though, realized it because they got out. So basically, you have guys that were are down 100 million, and other guys that are up 100 million because depending on when you got in and when you got out, some guys came out winners, some guys came out losers. A lot of shorts got creamed. I mean, there's no doubt about it. We saw a lot of shorts that exited in the 100s and 200s when I know that they put on their trade sub 100.
Right. Okay.
Yeah. So it's this was a bloody battle.
Do we know who the biggest shorters are still? Is that publicly available?
No, unfortunately not. Although on big long positions don't need to be disclosed, on the short side there is no disclosure.
Yeah, that's a change that I would like to see, just to have a little bit more transparency on that end, for sure.
Yeah, I'm kind of torn on that a little bit. I really want more transparency in the actual number, because to me, I really don't care who's doing the shorts. I want to know what's going on in the market, because for me, it's the numbers that help you trade, not who's on the other side.
Right. Yeah, that makes sense to me. Well, I think that's all I got for today. I think this is really illuminating, and my audience will gain a lot from this. So I appreciate you taking the call, and just offering some clarification. I really appreciate it.
Oh, it was fun. It was, always love to talk our product, and I think short selling is something that more people need to know more about, and the more people know, the easier it is to trade, and the more options they have in trading.
Right. Is there anything you want to say about S3 or anything you guys offer before we go?
Sure. I mean, we have a institutional platform that our SaaS platform, which is basically helping people collate their data. We normalize it, and we make their lives easy by making them easy to consume the data that they get from their brokers. But we also have a Black app, which is the largest selling app on Bloomberg. We also have it on Refinitiv. And we're about ready to put a web-based version on as well. But and we also have this retail app that you can get on shortsale.com. That's really inexpensive and lets you see what's going on the short side of the market. And we've seen a lot of activity, and a lot of retail investors are kind of saying, "Wow, I never saw this information before," and it actually helps me make decisions both on the long and short side. The one thing that we've kind of didn't really talk about much is that even long shareholders need to know what shorts are doing,
Mhm.
because if I own a stock and I see a bunch of shorts coming into a name, then it's time for me to take a look if I want to hold the stock any longer, because the shorts might know something that I don't.
Right. Definitely.
Mhm.
Okay. Well, I appreciate you coming on. This was super illuminating. You have a nice rest of your day.
Great, thank you. Well,
Thank you.
hopefully be back sometime.
Yeah, definitely. Take it easy.
So there we are. That was the interview. Feel free to ask some questions, and I can offer some clarifications on anything that might be confusing or might need a little bit more context. But I know for me that was offered a lot of answers that I needed, going into this. Yeah, and thank you to Ihor for taking some time out of his day to help out here. As I said, we were doing a live stream yesterday, and I kept on seeing his name referenced on articles and S3 Partners referenced on articles, and we tried to reach out to him during the live stream to see if he had any insights that he could give on the live stream, and he emailed back and said that we could talk today. So I'm thankful that we were able to make this happen. So let's see here. Am I holding or selling my GME after this interview? Well, I only have one share of GameStop. I have 300 and some shares of AMC. So I'm just holding my GameStop. It made me feel a little bit better about AMC because he said basically if there is an AMC squeeze, it hasn't happened yet. The shorts, I think, may have even increased in the very recent term for AMC, if I'm not mistaken. And we haven't really seen, that squeeze that may happen. Let's see. Where do we stand with AMC? I think a good point was made too with AMC just being a company of value in general, that in the long term they're going to produce cash. They produce cash before. I know they had some issues, maybe a year and a half ago. Now they have a bunch of their debt paid off. But in the long term, movie theaters are going to open back up completely. People are going to go in mass to movie theaters. And for me, at least, the way I can justify, if you will, the losses that I currently have on AMC, which isn't an amount that makes it so I can't pay my mortgage or anything like that. But I just figure if there's a squeeze, I want to be a part of it. If there's not a squeeze, I'm down like $1,000 right now, and maybe in 3-4 years or so, I'll end up breaking even on that position, and I'll be a part of the ride. Is kind of how I feel. He is the managing director at S3 Partners. And you'll see maybe now that you're familiar with S3 Partners, like if you look up articles on Bloomberg or Reuters or tons of different financial websites, you'll see S3 Partners as the cited source for data on a lot of our articles. And he's the managing director of data analytics at S3 Partners. Let's see, if you have any questions or clarifications, just let me know. Of course, he doesn't know, exactly what might happen. One thing that I wanted to touch on was the short ladder attacks, because I know that's kind of a sensitive subject. Because first off, we don't really know if short ladder attacks are happening with GameStop. They very well could be happening, but there's no way for us individual investors or anyone outside of any collusive action to know for sure what's happening. So I was really asking just his general opinion on if he thinks that's something that's happening. Of course, he doesn't know exactly. I don't know exactly. The only people that would know are the people who are doing it. Of course, we know that it is a thing that has happened in the past. But I think he brought up an important point that in order for something like that to happen, you have to have people working together who don't normally work together. Two organizations who are typically very competitive and against each other to work together. So that makes him suspect of short ladder attacks at least being a frequent thing that happens, because you need all these parties working together that are competitors. Also, something to point out about the short interest rates. So just for some clarification, we have the typical short interest rate, which includes the synthetic shares that are created when a short is created. So that's how you get sometimes short interest over 100%. So he was saying they have their own in-house metric, which is the S3 short interest percentage. And that what that does is it filters out the synthetic shares and gives you a true percentage of shorted shares compared to the float, compared to the total available shares. So one reason why we see the S3 Partners number lower than maybe some other reported numbers is they're using their S3 Partners short interest rate. So he said the S3 Partners short interest rate currently for GameStop is, I believe, around high 30%. But if we were to convert that into the formula that's used on some other sites, that would make it more like 50 to 55-ish% short interest. So he's saying at the peak of short interest with their S3 short interest metric, we were in the 60s. So in comparison, the typical short interest metric, we were at like 141% because there were so many synthetic shares. So from its peak, we're down 40-50% according to their data, the S3 Partners data. But that's still a very significant amount of short interest. It makes it harder to do a short squeeze because he's saying that there's some notice of shorts that have covered when the price was really high or when it was tumbling down. Of course, there's still a lot of people who are holding the shorts. And it's also important to note that one of our general ideas was correct, that any short interest that's reported beyond the 2 times monthly, the next short interest official report is on the 9th of February for the New York Stock Exchange. But their data, basically what they're doing is pooling data from a ton of sources and then, estimating short interest. And he was saying 80% of the time it's within 5 to 10%. So if that's the case for the current data that they're reporting, we could be looking at the S3 short interest data to be anywhere between mid-30s to as much as 50%, but still not quite as high as that 226%. And when asking about that, the really high short interest, why is there other people, or I've only seen on one site, why is this site reporting 226% short interest for GameStop, which again is just the percentage of shares that are shorted, the percentage of the float. He's saying what's likely happening is someone took the last reported short interest, which was January 27th, and they're adding any other short that's on top of that, which is how you can get a crazy high 226% or so, or short interest amount. Thank you for the nice comments on the interview, everyone. Thank you, Sean Porter. Can I summarize what he said about GameStop? Basically, he said there was some amount of squeeze that had already happened with GameStop. When we saw the price shoot up to 350, I think even for brief moments it was in the 400s. There was some amount of short squeeze that happened with shorters covering their positions, and that's why we saw, this sharp increase. But then we saw a situation where once the price was really high, let's say in the mid 350s, other shorters came in and said, well, let me short this thing because I think it's going to go down to whatever, $100. And we just saw additional shorts going as just general interest for those positions went down. And because of this, we may still see another squeeze. Of course, no one knows. He doesn't know. I don't know. The CEO of GameStop doesn't know if there'll be another short squeeze. It all depends really on the buy and hold aspect. What we've been saying all along. If everyone can truly work together, buy and hold, and there's not too many defectors, if you will, falling off as the price goes higher to try to, just take profit, then there will be another squeeze eventually. And kind of the same goes for AMC. Just checking out the questions here. Let's see here. I, of course, don't have any financial advice as to whether you should keep, buy, sell AMC. All I can say is I haven't sold my position yet. And just figure, worst case scenario, I hold it until eventually it goes up. Best case, we see some kind of squeeze and we can take profit at that point. I think this interview made me feel a little bit better about AMC. The fact that that the short position hasn't changed a whole lot for AMC. It still has the potential to jump up. We talked a little bit about how it's just a company that has value in general. They have a ton of assets. People will eventually go back to the movies. It made me feel a little bit more confident about the fact that I'm down $1,000 on AMC. But of course, if you need to pay your bills or something like that, don't listen to yourself, listen to your wallet if you have to, jump out at some point and pay your bills, because it could go lower. We really don't know, what exactly will happen from today to tomorrow to next week. Do you have any questions about short interest or anything like that? Something we might see happen as well that could potentially lead to additional squeezes, is if prices remain high for GameStop, AMC, which we have to remember, even though they've dropped significantly, they're still up significantly from where they were a month, 2 months ago. If prices remain high, the dust settles a little bit. Maybe, it's not in the news quite as much. You can most certainly bet that there will be additional shorts placed on both of these stocks, increasing short interest, which could potentially lead to a rallying of interest and potential squeeze of these stocks. Let's say 3 weeks from now, GameStop is still up over $150. And many shorters or institutional investors or hedge funds believe it should go back down to $4, if you will. We'll see a surge of new shorters take on these positions, and then we might have this rally cry and more people jumping into GameStop. And he also had a good point with Tesla, how the price for Tesla has just skyrocketed over time, not necessarily based on the value that it's producing, because they're not producing a ton of profits. Even though their sales are increasing, significantly, it's not producing cash for the average investor in Tesla. But the reason why we've seen that price just go through the roof is because of all the long holders, the extremely long holders who are unwilling to sell. So many people buy their share of Tesla and they just hold on to it forever. So if that sentiment gains more and more and more for GameStop, AMC, people who are like, I don't care what happens, I want to hold some of this stock, that's the most likely situation to see a true stock squeeze and see the price increase in an extremely dramatic way. If there's any other questions or clarifications that I can help with, just let me know in the chat. If you wonder why I'm looking down at the chat. All right, any final questions? There's no update yet with the Tarzan painting. I haven't received anything in the last day or so. All right, I think we're going to wrap it up then. Oh, Dogecoin opinion. I mean, with Dogecoin, to me, it's always just been a meme. I mean, I know it's a legitimate cryptocurrency, but I mean, it might be, it might be a nice little short-term buy. I have a buddy who made something like $5,000 last week in one day on Dogecoin, just because he saw the hype and he was like, well, let me just see what happens. Wrote it up for one afternoon and sold off. I think that's the case for most people. It's kind of the same deal where if like Tesla, if a bunch of people were to buy and hold it because they think Dogecoin is a good investment or a good store of value, is a good cryptocurrency, then yeah, the price will skyrocket. However, if we just have people who are just trying to jump in, go up 20%, jump out, that's probably just going to hurt it, aside from the fact that there's just general increased interest in it, which, helps in the long run increase the price, but, not necessarily somewhere where I would want to park my money in a wild ride that, goes up 20%, down 20% on any given day. Is there any real argument against investing in Bitcoin/Ethereum? I don't think there's really a good argument against investing it for the very long term. If you're like, I'm parking a small percentage of my portfolio in this for for basically ever, if I'm okay with it sitting there for 10 years, 20 years, whatever, there's not really a good argument against doing that, because pretty much everyone says this will be used at some capacity in the future. In the very long term, it will just become more stable and it'll ultimately increase in value. The argument against it is you could park your money in there now. We could see a sharp drop off. It could drop off 70%. I think we saw it go from 20,000 to 3,000 in the last 4 years and then back up to 30,000. So it's an investment, if you will, which it's more like a speculation if you're trying to make money off of it. It's an investment that's wildly volatile. So, the argument against it would be your portfolio of Bitcoin or Ethereum might cut off by 60%, but it might also double. Thank you. I'll try my best in the Super Bowl as Tom Brady. with long hair. Yeah, is Amazon going to start accepting Doge? That's a good question. That's when you know it's a good investment. You know, blockchain definitely would help with this clearinghouse issue that Robinhood has, with the 2-day waiting period, with the transfer of stocks in the clearinghouses and needing to have all this cash on hand. If there was some kind of cryptocurrency solution to that, that would be instantaneous trades back and forth, which it should be possible, to be honest, especially some kind of fully encrypted end-to-end, blockchain solution. I think that would be an awesome way to use cryptocurrency. Also, smart contracts. I mean, that's huge as well. What's my cat's name? I have 2 cats. One of them is a little designer cat, if you will. His name is Ender. And then I have a little dumpster cat named Onyx. People in the chat keep saying AMC is spiking up to $15 and back down again. We saw this the other day. I don't have a good answer as to why. We can check out this. Let's see if I can. We're seeing some buys after hour. We're up 1%. But we're not seeing, huge price changes. Let's see. I mean, I'm not sure. After hours trading isn't an exact science. It's more volatile than during the day. It's more opaque as to what exactly is happening trade-wise. So I just feel like the answer might just be after hours trading is wonky. Because we can see the actual price isn't, up to $16 as much as I wish it was. You'll see the minute by minute. Let's see here. So each one of these candles represents 3 minutes in time. The volume's pretty high, actually. Kind of a lot of trading going on, but we did just see it go from slightly negative in the last hour to slightly positive. I think we are seeing a situation where more and more people are buying and holding AMC. And that will only help its price. That's the best thing you can do, aside from going to the movies and giving them some money. Here's the 1 minute. Not sure how to show after hours on this chart, actually. Yeah, if someone knows how to show after hours on this chart, let me know. Thoughts on Webull being included in the group of kid brokers? I mean, it's a fintech, so I guess it's the one that the kids are using. But I don't know. Seems pretty darn good if you ask me. There we go. It doesn't give us a whole lot here with the after hours. Yeah, actually the volume's tiny. For the question about the stimulus check, you haven't received the second one yet. If you haven't received it, you have kind of two options. Either wait and you might receive it in the mail, probably as a debit card, very likely, or you can claim it on your 2020 tax return as a recovery income credit. Yeah, let's get it to 160,000 subscribers. If you're new here, go ahead and subscribe. Why not, you know? If you have any other questions I can address, feel free to ask them in the chat. Yeah, Mark Cuban did have a point about these fintechs and new brokers. He was saying that you do want a broker that has a multi-trillion-dollar balance sheet because then you don't have problems like the restrictions on stock sales. I haven't ever had any problems with Webull. I actually had problems with Schwab, and they're huge. They restricted a sale for me, or a purchase for me last Thursday of AMC, and then it went through like 4 hours later without my knowledge at a much higher price. So, you know, a broker with a huge balance sheet, I guess, on average would be better, but I had that problem with Schwab. I used this and Schwab, though. I can't play anything copywritten, unfortunately. I can't play any copywritten music. What are my expectations for Tuesday AMC? I mean, I would like to say that I don't think the price will go down much lower, but I said the same thing at $10. You know, it's really anyone's guess. I think if we see more and more interest in AMC, people willing to buy and hold, then we will 100% see the price increase and possibly even squeeze. I look like I play an instrument. I play the piano. There actually is an electronic drum kit right here, though, but I don't play it. I'm not a financial advisor. This is just entertainment purposes. That's why I don't say any specific, hey, you should buy this, you shouldn't buy this. I avoid that at all costs. I am still holding AMC. It's the drum kit is my editor's drum kit. We kind of have instruments all over in the studio because he has bands come in and play every once in a while. Pick a stock that has potential. My most recent investment was in Tyson Foods. That's a long-term buy. Of course, I'm not saying you should or shouldn't buy it, but I have a technical analysis video on YouTube. If you just search my name, Max Maher, Tyson Foods, it'll come up. And I really break down the financials and why I think it's a good long-term buy. What happened to the music? I'm just not playing it right now is all. I didn't plan on doing another marathon stream. I just wanted to ask or answer some questions after that interview if there's anything that I can help clarify things for anyone out there. How can we send you funny Wall Street bets video? You can email them to me, maxmahershow@gmail.com. AMC looking like a long-term hold now, question mark. The way I look at it is worst case, it's a long-term hold. Best case, we see a squeeze. And yeah, I mean, that's that. Okay, I suppose I can check out my emails and see if there's anything that you guys have sent me that we can talk about here on the stream. Because I haven't checked this all day. Let's see. Yeah, there's not a whole lot here. All right, let's see this. Got one email here. Okay, well, we'll see what we got here. Someone just sent me this.
The real Wolf of Wall Street. This is to all you Wall Street bettors, Robin Hooders, day traders. It's a message of love, respect, support, most importantly, encouragement. Because you all need to hear this right now. And so does Wall Street. You know, for years I've been telling you guys to never take no for an answer, right? To never stop trading, to hold the line, to keep squeezing the fucking testicles of those dastardly short sellers until you get what you want. Because you all deserve it. To never stop squeezing them by the balls until they're forced to either buy or die. And now, this shit that Robinhood is pulling on us now, stopping us from trading, barring us from their platform, our home, the home that we built. What the fuck is that, you know? Well, I'll tell you what it is. It's Wall Street It's the hedge funds. It's fucking Robinhood being fucking hypocrites. That's what it is. It's them trying to squash us, the little guy, to put us all back in our places instead of the other way around like we've been doing to them. So, you know what, Wall Street? You know what, Robinhood? We're not leaving. We're not leaving. We're not fucking leaving! The show goes on! This is our home! They're gonna need a fucking wrecking ball to take us out of here! They're gonna have to send in the National Guard and fucking SWAT team because we ain't going nowhere! Fuck them!
Okay, that was pretty good. Thank you for sending me that. That was awesome. You got to give him kudos for his acting there. Pretty darn good acting and editing. The editing on that was pretty amazing, if we're being honest. Because he was probably just saying this to like two people standing there with a camera, not this crowd of people. That was great. All right, I think that's a good way to a good note to end this on. Thanks for tuning in to the interview and this live stream. I'm sure I'll be back next week with another kind of live stream and some videos this weekend. So make sure you're subscribed, like this stream if you enjoyed it. And yeah, take it easy. Thank you for watching, and I hope you have a profitable day.